TGIF Warriors. Thank God I found ForexAnalytix, who agrees with me. How you doing, Bran? Ingmar, Mary, AJ. So the end march is on. Hi, team. Morning,
Right.
Paul.
Hi, Dale.
How you
Morning,
guys
Dale.
doing? How you guys doing? So just a quick one on the S&Ps. Despite all this action, today's the last trading day of the month. I think we're up 8 handles on the month after all this stuff. So kind of a neutral month, especially with some of the stars. But this has really been the star, right? So I don't know. I was talking for a while. We got through 37.5. You're going to see the 140 handle in here somewhere. A little disconnect between yen and yields, at least so far today. 10 years down 4 bips. So that correlation isn't working that well. And it really hasn't worked that well. It's put a cap on gold. But, that's the other part of it. Yeah. Wants to roll over, but it could also next week, unless this is it in the dollar. What do you guys think? The dollar's finally, going to coattail the yen. Let me start with you, Kman. I know you're up last night.
Hi there. Yeah, hey, Dale. Yeah. A few of us were up already feeling the weight of the hours, at
Yeah.
our...
Oh, yeah. Yeah. Were you able to but I bet you got into the flow of the upside once you saw the action.
Oh, yeah, a little bit.
Yeah.
Faster stuff, but yeah, it was all right. So Ueda kept his hands still, and despite they took away the a line about easing per se in the statement, he did reiterate that line in later on during the press conference. So all in all, bit of a dovish meeting, where people were expecting him to give a little bit more insight. He's really giving himself a month and a half more reflection time, let's say. And where the people were hoping for more, he didn't give anything more. So yen has weakened quite a bit, quite significantly.
Yeah.
But then again, we also seen the volatility of the yen. If you look at it globally, we are not outside huge, the outside specific, volatility in the yen, because over the past year or so, the yen has been pretty volatile. So yes, we are 200 points higher in dollar yen, and quite a bit higher.
Is 143 possible here?
Yeah, it's possible, but we have to look at what's happening in the rest, right? You said about the dollar. We have to see what happens in the rest of the currencies. That I think, and I said it on the Flow Show as well, and I think yesterday as well. I think going forward, we are going to have probably, because in a month and a half from now, the speculation will begin again, right? Because the base case for some sort of normalization in the future is still intact, in my opinion. But I
maybe
think
that happens above 140.
It is possible, Dale. 138 is a big level. 137, 3/4, 138, around there. It's a pretty big level. But it will depend on the speed again. Because remember Kuroda, when he said 200-300 points in dollar yen is a volatile market, we are not at that level. But if you go into the 140s, I would start to pay a little bit attention on about the yen volatility over there, especially on the way up. 143, yeah, it's possible. But then, for that, the data in the US need to hold up. Okay.
All right. And I look at the week, and on the week, Euro's a little lower, cable's a little stronger, and when I was talking to you, Ryan, earlier in the week when we're up around 88.40, it's not a good looking week. It looks like it's going to at least challenge 87 again. Just my view. Are you here today, or are you at a soccer game? Is Ryan here?
No, he's just not signed on. I don't see him
Oh,
signed on.
okay.
He literally may have fallen asleep at the desk.
Let me
So
ping.
the soccer game. No, I'm joking. Of course, no soccer games this early.
No,
Okay.
the fact is, and I need to commend Kman and Ryan. These guys were up like literally in the middle of the night for them through the BOJ. They were in the chat rooms. They're just analyzing everything, keeping all of our traders, up to date what's happening in the markets. Even when I went to sleep, they stayed awake. So I would not be surprised if Ryan is sleeping at his desk right at this moment. So great job, guys.
Pretty sure there were somewhere clubbing.
I understood you said clapping.
Clubbing.
You said clubbing. Okay. No, not yet, mate. But after my fifth or sixth coffee, I'm ready for the Red Bull.
All right. So Blake, I think you were talking about Amazon yesterday, saying it had bearish look to it, and earnings did not come in good for. I don't know if they came in good, but they sold it off pretty good.
Yeah, it was
what
actually
you were talking about
following.
yesterday.
Oh, I'm sorry.
Was that the chart you were showing yesterday about earnings?
Yeah, I mean,
Amazon, right?
It was up like 10% following its earnings,
Yeah.
and then after the call,
Yeah.
there was some downbeat comments regarding the cloud, I think, and so it gave back all of its gains. And the problem with Amazon and the stock is, if you look at the last,
Why don't you grab the chart and show us?
Okay, sure thing. Let me pull it up really quick. Give me 1 second, just getting everything situated here. Wasn't expecting the charts this early, but it's a Friday, so
that's okay.
I'm going to, no problem. So here's Amazon.
Ryan just joined, by the way.
Oh, good. Okay, we'll talk to Ryan here in a second. But you can see this is where we are pre-market. And just keep in mind that we were actually pre-market last night. We were up here at 120. So, you're looking at these island reversals, and that island reversal, I figured, okay, we're going to gap up. And then I had to leave, in the afternoon. I didn't sit around for the earnings call or anything like that. When I got back to my desk, I saw that it had reversed, and I'm like, oh shoot, it captured a lot of people on the long side, probably stopped out a ton of people last night. And then on top of it, probably got a lot of people bullish Amazon. They're going to wake up, on the wrong side this morning, unfortunately. And, when you get this island reversal, because you have to imagine if the stock, opens right around here, roughly, where we're at, you can see here, if we gap and crap, that means gap and move lower for the day. I mean, we could very easily be breaking down in Amazon. Amazon's a big, happens to be one of the bigger companies in the United States. So if I'm not mistaken. So I think it's something that we should be paying attention to as we go into today's trade. So, hey, Dale, Ryan is here. So Ryan, you're around?
Yep, I'm very round.
We thought you fell asleep at the desk.
No, I was doing the German CPI data.
And how did that come out, by the way?
A little bit on the soft side, pretty much as the regionals had, but still sticky levels, still well elevated.
Okay. All right. Well, thanks for updating that. Dale, what was the question you had for Ryan just a bit ago?
I don't even recall. I was just probably.
It was about Sterling. It was about Sterling, Dale.
Oh, okay. Thank you, Mr. Memory. Yeah, Ryan. Because we were talking about Euro Pound earlier in the week, and it's not putting in such a great weekly candle. Looks like, I don't know, 87 could be tested again. Yeah. What are you thinking on EG? You giving up the ghost on it and buy it at lower levels?
I'm still holding my core long. Still got a little bit around this 88 level. I did chop a big chunk up 88, 46, 47s early this week just because it kept hitting that 60 level. It's made those new highs above that 60 level, but not by much. And I've been saying for a while, it's not moving really on any fundamental drivers. So here we are, 88, 87, 90s, the close level. But yeah, if you break that, then again, you're looking at those low 87s, 87.20, and a decent range to trade. So I'll be looking at those levels if we get down there, just to play between the goalposts, as we like to say.
Okay.
Yeah,
All right.
and the multiple failures up here, I think it's wise, Ryan, that you took some of that off. That was one of the notes from this week is that, hey, we got a failed breakout of this triangle, the failure at the 618 retracement. And, and it gave you days of failures before it just started to roll over. So, and I guess the one thing that you got to take a look at the sterling is that, the pound may be,
it's
maybe
going to blow to the upside. It does.
Yeah, you'd think so, right? Like,
Yeah.
I tried to explain this concept, and I'll explain it to you guys. This is the conversation we had a few days ago. We're in such a range where, and everybody knows that 125 level or 124.50 was such a big level of resistance. I mean, you got everybody shorting up here, and then it comes down towards support. You get some people buying, comes back up here. People start shorting, right? They know this is really key resistance. It was big resistance before. They're short. Now you get back down towards support and people start buying down here. And then now that you're up here, you got everybody, tailing off their longs. And then, you get people starting to short, or they've probably been shorting for the last week or two, and they're just not getting paid. So at some point, it could blow, right, Dale? I mean,
I'm thinking
that's
26 and a half or so.
Yeah. So
the only counter I'll make to that, particularly this week, is that we have seen some breaks, but they've not held. Euro sterling broke that 88.60, got a few pips up, couldn't hold it. You look at dollar CAD, we've been banging ahead on 136.50 for pretty much all week and beyond. We broke today. It managed sort of 17 pips above, and now it's back below. Dollar China, that was another one we were looking at in the flow show for several weeks, watching this level ping pong. It broke that 91 handle, got just about up to 95, and now you're seeing it just bleed back down again. So there's lots of these breaks happening. Some are confirming, that's still a confirmed break above 691 in that dollar China there. But then, like I say, with dollar CAD, it breaks, it fails. Euro sterling broke, failed. Even you could say euro dollar had a break to 111, failed. So, yeah, if you want to try a break trade, and cable could be a decent one to go with, but don't give it too much room. If you hit the stops, take some money off. If you get 20, 30 pips in, take some money off, lock in your stop behind, and then see what it wants to do.
I'd have to guess, and this is my guess because of today. You referenced the dollar CAD, and the dollar CAD pushed above that 618, the 136.50, barely could hold. We're slumping. Obviously, we got data today, but I think a lot of this is really predicated on the dollar yen move. I mean, the dollar yen and the other yen pairs. There's so much liquidity here in dollar yen, euro yen, which we can look at here in a second. They're just blasting higher. And I got to tell everybody, I got stopped out of the dollar yen last night. I was playing it, to the short side. Couple, setups was the ascending, we had the ascending wedge here that you can see here. I was playing that, but then yesterday we started to develop that bull flag pattern, and I looked at it and I'm like, it's mixed, but Ueda's dovish, seemingly dovish, even though he's made some adjustments. We can talk a little bit about that here in a second. It seemed to catch the market wrong-footed. I mean, pretty much every bank was targeting the 120 yens on top of retail, myself included. And so here we are squeezing higher, right? So So anyway, I guess the reason why I point this out is because when you get this big of a move and you see that big of a move come through, let's just use the Canadian yen, for example, this big of a move right here in the Canadian yen, it probably elicits some movement in the other Canadian pairs like the Canadian dollar. And maybe that was the catalyst that drove us above that resistance, at least near term. You know, whether it's going to stick or not probably has more to do with, you know, today's data. But what do you guys, before we go on to the conversation about the yen and talk a little bit more, you know, deep dive in the yen here, what do you think about cross rate effects in the markets? Because I pay attention to them a lot. What do you think, Ryan?
I think today it's like dropping a bag of marbles on the floor. You don't know which one to chase, because you know it's a bit. If you look at Aussie yen, for example,
You never could go wrong choosing the cat's eye. And the boulder, the big one, the boulder.
Yeah.
Now you're bringing back youth the Dale's youth.
When I hung out
the
with
tiger eye, baby,
Finn.
the tiger eye was.
Oh, you remember too? Yeah,
Sorry.
it's when I hung out with Huckleberry.
We digress.
Finn.
Okay, so
go ahead,
Ryan, what are you thinking here?
Yeah, so you look at something like Euro yen, it's busting. Aussie yen, it's not. It's looking a bit like it's being dragged along because of everything. We know what's going on in the Aussie dollar. K flagged Aussie yen as a potential trade post BOJ because it might have that heavy effect around it. So you're looking around the space, and you look at crosses and you see what's driving what. And at the moment, like dollar CAD, you're just showing CAD yen up. So in theory, dollar CAD should be a bit lower, not breaking higher. The dollar's moving up while yen pairs are moving up, and they've been dragging euro, dollar, and cable up recently, and that's broken. Yield dollar yen's not moving in tandem with US yields because of what's happened in Japan, and the focus is on Japanese yields. So it's all a bit messy in looking at what pair is driving what bus, so to speak. So for me today, it's not really a clean show. I can't say that's moving because of this or that or the other sort of, with any sort of confidence.
I sure do feel that the yen did inject a lot of like cross rate action in the market. Kman, what do you think about the cross rate moves? We'll talk about the BOJ here in a second, but what do you think about the cross rate
crosses
moves
in general? It's 2/3 of my life. People know that I trade a lot of crosses. I probably trade 2/3 crosses and 1/3 dollar pairs.
Yeah, me too.
It's really there's a couple of reasons. Well, I mean, there's a professional reasons. My career, I've been market making and trading a lot of crosses as well, and market making crosses as well. But so I probably understand the finesse or what's sometimes behind it. But everybody can learn that. I think they are extremely good tools because you can play one against the other currency without having to go through dollar pairs, because the dollar can have a different opinion, or the dollar pairs can be relatively stable, and still the crosses are moving. A good example is cable. Cable is relatively stable, but the euro sterling is on the move, right?
Yeah.
Crosses I trade a lot. Yeah.
A lot of people could learn that from you, Kman. You should have some type of course or webinar for people to want to learn the ins and outs of the crosses.
I can't talk and I can't write, Dale. No, I mean, yeah, of course. I mean, even
you can talk.
It's not that I'm teaching, but I'm telling people a lot in our organization. Everybody who wants to approach me, they're free to do, and there's a few people who do, and I'm taking my time with them to explain.
Pretty cool.
You know what, Kman, you said something, and it's a word that I think is very important in FX, especially those. And when trading for Gelos for the years that I trade for those guys, they all trade crosses. So, and you said a word that really resonates with me, because I've traded like a lot of the euro and sterling crosses for so many years of my FX lifetime. It's a lot of finesse, and you use them to really hedge other trades as well. And that's, why I play a lot of, euro Aussie, euro sterling, pound Aussie, pound sterling. Really use those to my advantage, and sometimes euro sterling as well when it's really moving. But it's sometime that we will have a segregated show where you can really discuss some of the ins and outs of that. And if you guys are wanting something like that, make sure you let Kman know, and maybe we'll organize it. So anyway,
or just come to the Flow Show where we cover them regularly.
There you go. And if you guys don't know how to get to the Flow Show, let me go ahead and get maybe Ryan can actually put in the free link.
Yeah, you talk, mate. I'll get oh, you got it.
Okay, yeah, it's right here. If you guys want to just go to the site, and you guys go to the Flow Show every day. Shoot, if I could get up at 2 o'clock in the morning every day, I'd be on the Flow Show. I really did enjoy that time change where I got to listen to like 30 minutes of your show. It was great. Okay, anyway, Stelios, I think you were here, right?
Nope.
Okay. Well, all right, moving along. So,
hello.
Stelios, what do you make of? First of all, we got PCE coming up, but we got precious metals, and I'm trying to find my gold chart. Just give me 1 second. So we got gold just basically paused right on support here. Is this PCE going to be a breaker of new data? And I'm sorry, we're going to still talk BOJ. Don't go anywhere, people.
Yeah. Well, it could be. I think the level, we talked about this earlier on the Flow Show, is a 23.6 fib retracement, which is around 1947 or so. It really has to, for bears, gold really has to get to that level. I mean, the retracement so far from the highs has been very shallow, and we're still only about 4% away from all-time highs. And gold can do that in a day if things get hairy. So I think correction should continue in metals a little bit more. I hope it does, because I want to get some more silver in at around 2380 to 24. And if gold gets to 1947, I think I'm going to have a go there as well. But PCE today, yes, could be a mover. Having said that, the recent trend has been for market to disappoint. So I think likely disappointment, and see how it goes.
All right. Well, yeah, PCE is going to be, talk about, softening data, because, Kman said something pretty important when you're talking about the dollar yen. And by the way, I was just looking at like longer term dollar yen, because I'm still short Aussie yen and Canadian yen. I'm actually, flat Aussie yen, and, down a little bit in Canadian yen, even though I got stopped out of the dollar yen and euro yen overnight. So I still try to look at it from am I going to maintain my positions here? The dollar yen, if we're building some sort of triangle consolidation, which is entirely possible, we should stop somewhere around here. Well, we do have PCE data today, which will be out here in the next 7 minutes, which we'll go over. But right now, the technical formations are still very bullish. We got a bull flag formation breakout, so we'll have to see, how it all acts around here. But going back to the BOJ, a lot of the market's looking at Ueda as being like, dovish, didn't adjust YCC. But what are you guys' takeaway? I mean, Ryan, you've been up all night. Kman, we'll go to you next. Ryan, we've been up all night. What was your takeaway with the BOJ here?
Yeah, well, obviously the announcement itself was as expected, no change to policy any which way. The key points I took from it was that they dropped the language on keeping rates at or lower levels. So you could take that as a hawkish sign. They also upped their CPI forecasts, some of which are a bit higher than expected. So again, another move towards their objective. We also got the Tokyo CPI just before that, which came in higher in the April numbers. If that translates to the nation CPI, then again, there's sticky inflation there. So there's three key things that point to reasons why they should head to the exit door. Then Ueda came out and just basically went Kuroda on us, and we're going to continue easing. We need to make that clear that we're going to continue easing. We're not there yet. The same old lines, and the market's gone, well, don't care about the hawkish stuff. We're getting a Kuroda Mark II. probably market a bit short yen pairs, and here we are trading some 250, 280 pips higher.
All right. Well, thank you for that summation. Kman, what do you think was your major takeaways here? I mean, because some of the numbers were adjusted, but they're still looking for CPI to come in well below 2%, correct?
Well, they were adjusted around the expected revisions. Only the median did touch 2%, but the rest is like this around where it should be expected. But yeah, I think Ueda is buying. It's what I said before. He's buying himself time. So the market was probably more hoping than expecting him to do something. But the thing is, my main takeaway towards the markets is that if I'm correct, and he bought himself a month and a half more reflection time, if you're short dollar yen in a month's time, you'll be short dollar yen 100 points lower because of the funding. And I don't think that the players in the market, those who have longer term positions, they are ready to just jump on that right now, because they say that, well, if they don't do anything for a month and a half, they are still going to be hovering at max, what is it, 0.5% or less in the short term, and you're still going to pay away 4%, and no differential. So no, but that is really the takeaway of the whole thing, right?
Yeah, hence this big move. I mean, because if you guys think about what Kman is saying here, from these, remember the dollar yen, or not the dollar yen, the yen is still the world's funding currency right now for carry trades. I mean, if one of the reasons why I got long some dollar MEX last night is because I'm like, okay, if the market goes tits up when I'm sleeping, I know the currency or the yen carry trade that's going to get hit the most is Mexican yen, and I can't trade it, me personally, for my broker, so I have to trade it through pesos, just through the dollar, because I know the dollar MEX would stage a move. But if it was like a serious meltdown in carry, this one would go. So, but as Kman points out, if they're not going to move for a month, month and a half, I mean, you're going to be stuck trying to carry some of these positions longer term. It just doesn't work when it comes to financing. So that's a great point, Kman. So, any other takeaways from the BOJ in general?
No, the rest is, as I said, is buying time. And my base case remains in completely unchanged. I think there is going to be a form of normalization. Now, the next meeting, we are going to face, apart from them likely saying a little bit more, because they will have had a month and a half time, and yes, the Tokyo CPI is higher. So next time we are going to see, perhaps he's going to tell us something about the speed of things, and then we will have to reassess again. What I do expect is that into the next meeting, the week before or so, we are going to see some speculation again of yen buyers, because that's going to be the game now. Same as the market is always counter trading or trying to counter trade the Fed. Now the same game is going to start with the Bank of Japan, right? So that's
I can guarantee I'll be there.
Yeah, well, and I said in the room, perhaps the next time I'll be there too. But
yeah, right. All right. Well, thanks for the update. We have just a couple minutes, like a minute before data comes out. I'm going to pull up the dollar index, but really I need to pull up some of these charts. Hey, Steve, we heard a little bit from you this morning. Any thoughts on the data that's going to be released here shortly? Any thoughts from you, just in general?
Good morning.
Good morning.
We talked about it yesterday. I do believe that probably we'll see GDP data weakening, although, as I said, again, I'm kind of skeptical about GDP numbers in general, because understating inflation overstates GDP. So, yeah. All
right. Well, we have Canadian GDP coming out, PCE data that we'll be watching pretty carefully. And we'll any last minute thoughts regarding the data? Oh, we got 10 seconds. Stelios, Ryan, Kman, Dale, anybody?
Let it happen.
All right. let's have
Yeah.
some, we have the dollar index
Wise
to the
words.
left, S&P right here in the middle, and then watch yields here to the right. Let's see how the dollar responds. Looks
see
like
it
we're
yet.
getting the dollars firming up a little bit. Data or not on the data. It's just do you guys see
Any
it?
second now.
Personal income coming in roughly in line, 0.3% on the month. Still waiting for the big numbers.
Yields are popping.
I don't see it.
Oh, there's Canadian GDP.
Q1 employment costs and salaries up 1.2% each.
Yeah, I see ECI is coming out. This
We're waiting.
Come on.
Oh, this is worse than UEDA last night.
so the ECI, I mean the
President
employment
Biden
cost
is-
index.
GDP
President
even
Biden is running all the information. over to
GDP
the
even worse
Commerce
than
Department.
expected. Talking about Canada, of course, 0.1 versus 0.5 was the previous one.
Run, Joe, run. Get the numbers over to the Commerce Department.
Oh,
Oh, there we go.
4.6.
Oops.
Okay. So that's
Gold just
0.1
moved.
better
That's
than
why.
expected.
PCE down coming in at 4.2 versus 4.1 expected. That all important core number, 4.6. So 1 pip up on expected as per last month, but last month got revised up to 4.7%.
You can see that
So,
right here.
It's sticky.
Stagflation.
Oh, don't say that word. That word's like,
Stagflation.
that's like saying, what do you say when you're in the mirror? What was the old if you want the ghost or devil to come, what do you say? What was that when
What?
you like, oh
What, you say
shit,
it
you
3
guys know.
times.
You guys, yeah, you say it 3 times.
Hiya, Jerry.
Whatever it
And
is.
then-
Anyway, all right. I'm trying to make a joke, which is bad because it's Friday. Thank God
Candyman.
it's
There
Friday.
you go. Candyman.
Candyman,
There
yeah.
you go.
Candyman. There we go. All right. So, hey guys, I just want to say have a great Friday. I know I'm going to definitely have a beer today because after the yen taking me a little bit to school overnight, I am going to have a drink. I hope you guys all have a safe and great weekend. Make sure you jump in the ForexAnalytix community. You want to see how bustling it is. You should just go and take a look at all that was happening in Asia last night. This is the general chat room. Guys, I mean, it just, it was popping off with Ryan and Kman and everybody else that was there too. And I was trying to manage through the soccer fields. It's just a lot of conversations going on. This is less than 12 hours. This is like 12 hours ago. Heck, here's some headlines from the BOJ. This is after I went to sleep. And you can just see all the conversations for the last, that's just the general chat room. That's not talking the S&P room, which is quite bustling right now.
What a bunch of action junkies.
It is, man. We are. So anyway.
I'll see everyone at the next FA meeting. And that's Forex Anonymous for people who wanted to trade and now they have to. I'll
all
see
right.
you
Thanks,
there.
team. Appreciate it.
Hey, great
Great,
job,
great to
Blake
see you.
and Kman and Ryan and Steve and Stell and the rest of the team in the background laid it on the court again for everyone. Thank you, team. Dream team.
Cheers, Dale.
Thank you, Dale.
Thank you, Dale.
Have a great weekend, everyone.
You do, mate.
guys and Jerry Robinson, welcome back to F.A.C.E.
Great to be here. Yeah, Dale,
Yeah.
thanks a bunch.
Yeah, I'm looking forward to seeing what's top of mind for you in this climate that we're currently in, Jerry. You were right about, just testing my recall a little bit. You were right about a nice silver rally. I think that's the only thing I really kind of held from our last interview. Why don't you refresh my memory and our memory and tell us what you're seeing at Follow the Money daily?
Sure. Yeah, you bet. Well, great to be here again. Always look forward to talking to you guys. The markets are still in an uptrend.
You want to share your screen, Jer?
Yeah, let me go ahead. I've got a few charts that might be helpful here.
Okay.
Let me do that.
So the market's still in an uptrend. Recent tests, still hasn't penetrated 4,200, but it sounds like you're looking for better numbers coming in the market and a continuation. No sell in May and go away in the market.
let's see here if you're seeing my screen.
I'm seeing the Zoom.
Oh, let's see. I
box
got
right now.
got the wrong one here. Hold on. Let me get that changed.
Jerry does a lot of great research. Stick around. You'll see some nice technical work here.
How about that? Do you see a
Okay, yeah.
S&P
Okay.
chart? Okay, good deal.
Yeah.
Yeah. Okay. So first of all, where we stand now, from our opinion, we've been following these markets, Dale, probably not as long as you, but I've been
Oh,
at this.
you had longer. You have.
Well, 25 years, 25 years. As whenever I started trading, I traded my
Oh.
first stock way back in the
Okay.
day. So,
All right.
but anyway, over time we've seen a lot of different things. We have to admit what we saw in 2020 was radical. It was crazy. Not so much from a disease. Diseases are that's kind of
Part
what
of
we have
life.
to deal. Yeah, that's part of life. What's not necessarily part of life is seeing the type of intervention that we
Response.
saw. The response, exactly. I mean, I'm not a political guy whatsoever. To be honest with you, I don't really have, even though I find it interesting and perhaps even exciting around election times, just to see what happens, just to see who people are going to choose, just like everybody else. I quite frankly see both parties as hypocrites, and that was on full display in 2020. I think the smart guys in the room will look back, Dale, and they'll realize the problems we had in the economy were much more self-imposed than people are willing to let on. And I think people are beginning.
Larry Summers warned us.
Yeah, entirely self-imposed. I mean, underneath President Trump, for example, which may be a bad idea to even bring up his name, but just by looking at what happened under him, I mean, we never saw more fiscal spending ever in one moment, combined with monetary spending ever in one moment, in 1 year. It was almost like the government just froze up and had no idea what to do. And that's exactly what they did. So they went on a spending rampage, and it led to this 2021 incredible rally. And as we moved into the 2022, of course, the inflation caught up with us. It drove, asset prices down as inflation went up and the Fed began raising interest rates. We talked about it last time, by a factor of 5,000%, from nearly zero all the way up to where we are now, somewhere about 5%. We expect the Fed to raise interest rates by another quarter basis point next week. And then we expect a pause. That pause could go on for probably through the summer, in our opinion. And then by September, we would expect that as early as September, we would expect there could be the very first rate cut. Reason being is that the U.S. economy is not built for higher rates. It just simply isn't. This economy is built for cheap money. And so we don't suspect that the Fed, even though it talks tough and even though it's played tough here by raising interest rates, we don't think that it has the ability to maintain rates here, as evidenced by the banking sector, which has already been hammered because of their balance sheets, and a variety of other things as well. We saw, like, for example, with the latest GDP print that came in, showing a 1.1% growth rate. That's about where we expect the United States to be, unless they're going to drive interest rates back down to zero. And then maybe they can get it up to 2%. Okay. So the Fed is kind of a one-trick pony here. They either raise rates or they cut rates, and they've done their raising. Now they're going to have to turn around and begin cutting.
Okay, so you think that he's going to announce a pause?
No, well, no, maybe. I mean, what I really expect is for the Fed to come out with their 25 basis point rate hike and then start prepping for that pause. They may give the pause, and that could spark a big rally. See that the equity bears here have had their moment. This is one of the things we've been talking to our members about here at followthemoney.com, is we've been encouraging them to be very cautious in being super bearish. A lot of the bearishness, Dale, and when I say these things, I want everybody listening to know that I don't have a political bone in my body, but I realize that politics often drives people's investing and it also drives their trading. And I've seen so many people get burned because what they'll do is they will take politics, the current political regime, and they'll think, well, the market can never go up with this guy in office, right? That's what they'll tell
It's all
themselves.
about liquidity. So,
Right.
yeah. So
Exactly.
you see monetary conditions have been loosening with the injection from
Yes.
after SVB and the facilities that they've set up for banks. That I hear they're still going to the window and grabbing as much money as they can, the banks, and this
Well,
program.
yeah, as long as it's open, and we don't see it closing down because the banking sector is still a problem. It's still got a problem here. So right now, we had expected the market to kind of move this way at the beginning of the year. We laid out our market commentary at the beginning of the year, Dale. We said, look, cryptocurrency is going to very likely going to lead the market, lead the recovery. We've certainly seen that. Bitcoin up nearly 70% or so, Ethereum up something very big as well. We also expected QQQ, the more tech heavy stocks, to also lead the overall equity to outperform. And they've certainly done that. One area where we missed it, and I don't think we've missed it because I think the year will still bear this out, is we also expected small caps to participate, because typically whenever you kind of move from a bad to a less bad situation, those small caps will tend to rally. So
yeah, they're sitting right at their, lows. They better hold here.
Yeah, exactly. In fact, I've got a chart here somewhere of, let me come down. I hope this doesn't spin your, there's QQQ. You can see there's a real nice bull market going on there. Let me just go gently here. Yeah. Let me see. Let me do this continuous here. And I think, here's Russell 2000. Okay. Yeah. So the Russell 2000, we do expect that small caps will rally in 2023. And I think in this case, you got to be real careful if you're a stock picker, but just using something like the IWM, the Russell 2000, I guess Schwab has a new ETF as well that just came out this year targeting small caps, SCHA. I'm interested in that one. I like SCHD for dividends. I think Schwab has some great funds for that purpose, low cost. But the Russell 2000 ETF, IWM, we think this one also could do well. We're expecting small caps to rally, predominantly due to the fact that people will slowly begin to realize we're going from bad to less bad. There's a whole bunch of bears right now. If you look at the AAII polls, or if you look at, just the average, the average person on the street, most people, and this is normal, Dale, this, this is the way it works. So we just had 2022 and people didn't realize what was happening until about halfway through the year. Then like, oh my goodness, we're in a bear market. And then of course it came down and then it bottomed and then it started going back up again. And people don't believe their lying eyes, so they see now that it's going back up, but they say, well, no, it has to go back because they're still stuck in bear mode, But as this market goes up and we're at the tail end of rate hikes, now the rate cuts are going to come in. That's a tailwind for stocks. It's going to be a drag on the US dollar, which has really been driving that equity bear market. Now we're moving back into a time, Dale, where the markets are going back up and people don't believe it. And so we would imagine that over time, people will start piling back in. There's a lot of cash on the sidelines. And as they do, it's going to drive this market even higher as we go forward. There's a few things like, let's consider the dollar. For example, the dollar had this huge run in 2021, 2022, of course, and it was, constant. Every time it touched its 50-day moving average, it was a buy signal until it broke down as we started getting near the time where the Fed said, okay, we really are getting near a time where we're going, and the market started forecasting some sort of pause. Well, the dollar has already come down dramatically from, say, 115 on the index back in September down to 101, 100, somewhere in there. And we see that the dollar has a lot more further to go. We would expect the dollar over the next 12 to 18 months, to hit down here back where it was, say, back in 2018, even in 2021, where we're down to 90 or 88. That's going to be a huge tailwind for assets like gold and silver.
But what about if we get what you're depicting on the prior slide, we get a bear market rally in the dollar back to 108.
Yeah, well, we
don't
certainly
you think
could.
that equities, one of the reasons may be risk off
Yeah,
for the dollar to rally like that?
yeah, but the catalysts for a dollar rally are kind of unseen right now. They would have to be, in my opinion, they would just simply have to be black swans, which none of us can predict. I mean, we really have a lot of uncertainty right now. We have interest rate uncertainty, which we don't think there's too much uncertainty there. We think the Fed has made it clear that they have got to their they got to their terminal rate here probably this Tuesday. They're probably going to make that clear. That should clarify interest rate concerns. And people are then going to realize we may be stuck here for the summer, but the Fed really has no choice but to start cutting that rate. Otherwise, they're going to continue to roll.
Let's get back to the dollar, Jerry.
Yeah, yeah.
Your chart there, all right, it's a triangle. There's confluence at 107.5. Underneath, you say major resistance, 106, 108. Do you think, I don't think you'd put it up on the chart unless you thought that was a possibility for the dollar to rally back to those levels and be a great short up there.
It'd be a great short. Yes.
Yeah, but for it to get back up there, don't you think it's going to take its toll on risk and metals and everything? You know, don't you think really if you get the dollar right, Jerry, you get everything else right?
Well, I think it's a great point. Yeah, I do. What I have a difficult time seeing is what could be the catalyst that would send the dollar up here, because I see the dollar more likely to come down than to come back and test this area, you know, just based upon the catalyst.
I mean, I'm a bear too, but you know, you have those bear mark and you know what? Everyone's a bear.
Right.
Just like you make the argument about sentiment, contrary sentiment in the market is that everyone's bearish.
Yes.
Try and find a dollar bull out there.
All right. Well, that's true.
Right. Can you find one? Besides Brent Johnson and his milkshake theory?
Yeah, you're right. I don't think there's too many. I mean, they would have to assume that we're going much higher on interest rates, and there's not a lot of folks who do, you know, so.
Yeah. Okay.
So you
Anyway.
got that. Yeah. So you got that
Go ahead.
you got that interest rate uncertainty. You also have debt ceiling uncertainty. That's also driving a lot of this bearishness. And because people are saying, we don't know, you know, we don't know if if Washington is going to pay Social Security. Well, we don't know if they're going to pay military salaries. You know, we don't know if they're actually going to pay their bills. Okay, well, this is a non-starter because we know that Washington does something very well, and that is they borrow to pay everybody else, and they're never going to stop until they're forced to. They're not going to voluntarily stop borrowing to pay people. But in other words, that's the narrative right now. The media is saying, will they voluntarily stop borrowing to pay people? Of course not. Of course, the United States is not going to stop borrowing to pay people. That's exactly how they do it. That's like their MO. So we have no fear about the debt ceiling. Of course, it's going to be theatrics and good for media ratings. That's really what they're ginning up here. But in reality, we're not concerned at all that the Republicans and Democrats are going to come to an agreement to keep borrowing money to spend money we don't have. We have no doubt. So the debt ceiling really is also kind of an uncertainty that we think is already pretty much resolved, even though the media, you know, is not telling us.
I heard an interesting take on this, Jerry, that, you know, everyone's going to be afraid during the theatrics. But the real problem comes when they do raise the debt ceiling, because that gives the Treasury room for issuance, and they're going to soak up all the liquidity that's going to other places right now.
Well, yeah, that's a good point. I mean, some of the after effects of it, of course, are not good. But as far as the actual debt ceiling itself, because we just move from crisis to crisis, we just lurch from this problem to that problem. And so even if the debt ceiling is solved, then it'll be, you know, something else. It'll always be something else. The other uncertainty that people are worried about is the recession. China. You know, this has been the most telegraphed recession of my life. I mean, we've been promised a recession for a long time. And it may come, and it's probably very likely will, because that's what happens. Recessions do come. But but it's been so telegraphed that it's been baked into the market. So again, people who are concerned about a debt ceiling crash, well, we don't see that. People who are worried about a recession, well, we may get it, but it's already baked into the cake. People who are worried about interest rates, well, the interest rates are, they've kind of reached their top tier. So we're not too terribly concerned about that. That leaves the banking sector crisis. I think that's, out of all of the uncertainties, the banking sector uncertainty is probably the most valid.
Because
but even
it'll tighten credit conditions.
Right. Yeah, that is a real concern. However, the Fed has made it abundantly clear, and the Treasury has made it abundantly clear that they're willing to do whatever it takes. And whenever they use that kind of language, they typically stave off, liquidity issues. And so, those uncertainties we feel rather sublime about. We're not too terribly concerned about that. And what we've been doing with our own members is we've been saying, look, if you're committed to a long-term investment strategy, don't let these near-term, concerns stop you, because what we sadly saw, and what we were doing here at our own website and mentoring and coaching, is we were trying to help people through 2022 to not stop their investment strategy. We trade and we invest. We typically trade around our long-term investments, or we'll trade something else as well. But the point is that many people do it wrong. They buy once they're fully convinced that there's not a problem in the world, right? And they'll say, okay, well then I'll buy. Okay, well then when the problems come back and then the market goes down, well then they stop, and then they often sell. So like I say, in 2022, well, this was a wonderful time for people to not stop, whatever they had been doing the year before or the year before. This was a grand opportunity to be able to keep plowing, keep dollar cost averaging, keep doing whatever they normally did. But instead, what we saw is many people sell near the bottom, and now many of them are still scared, watching it go back up. What we're fearful of is the fact that those same people will then start piling back in once they feel like everything is okay again. Well, this is how I invested for the first 10 years of my life, and it was a disaster. So I learned pretty quickly. Thankfully, by the time the 2008 crash had come, I realized that you can't be you can't buy at the top and sell at the low forever. You've got to have a better plan than that. And that's one of the things we try to help people with, is to stick to their plan. But when it comes to specific markets, you mentioned silver. Silver's on the verge of doing something pretty big. It really is dependent. It really is dependent upon the dollar and also global growth,
or how thick your red pen is.
You're right. Right. That's right. That's right. It all depends. But we can see silver doing well. We're not in the camp, though, that thinks that silver goes to some absurd price. I would say that the more likely case is if you're looking for that kind of market, you would want to be looking at Bitcoin. Yeah, Bitcoin, we've been bullish on since 2011. We were so lucky to get in early. We had a friend named Trace Mayer who has kind of evaporated from the ecosphere lately, but he was a wonderful. He tipped me off very early. Bitcoin is just a market that I don't think people want to ignore if they're trading, for sure. But we got a wonderful 50-day bounce just the other day. It pulled back, and there was a lot of fear in the markets, but we got a nice high volume 50-day bounce. We see Bitcoin going to much higher prices this year and
Go
later.
ahead. You could say the number. Don't be afraid.
Okay, I won't be. Okay, good. Thank you.
Go ahead, man.
2025, we have a forecast of $275,000 on Bitcoin. Now, that's actually when I issued that back in 2020, I think I felt like an idiot because nobody was talking. And then, of course, Kathy Wood's like, it's going to be $1 million, and then other people started coming out, and so I feel much better now. I feel less sheepish. But 2025. We see a price of $275,000, being reached at some point.
10 bagger.
It's a 10. Yeah. It really is. And that, of course, and I had somebody ask me the other day, valid question. He said, well, if you think, it's going up that much, it's like, why aren't you selling the farm and putting everything in it? And I explained to them that's how you end up in a world of hurt. You know, we allocate a nickel out of every dollar that we have to invest into crypto. And it's been that way since 2011. I mean, that's what we do, you know, just a nickel.
Yeah.
That
Yeah.
nickel is enough,
Grow.
you know, and so it keeps, but some people get way too heavy into certain assets and they really put a lot of risk upon themselves.
Well, it's baseball season, right? Well, if you swing for the fences, and even the greatest home run hitters were also, many of them were strikeout kings at the same time.
That's
The
right.
difference is you can only strike out once if you're swinging for the fences.
That's right. Yeah.
They get to come up and they maybe have 3 more at bats during the game.
That's right.
Anyway, yeah.
So
Try and grind it out. Grind it out. You know,
exactly.
kill yourself making money in the market. That's the way to do it. Grind it out.
Well, if you're looking at, say, like we use something called the extreme value zone, which represents a 60 to 80% discount range from the previous peak. And so typically, if we get it down into this range, then what we'll do is, like, we dollar cost into Bitcoin once a week. But what we'll do is we'll double up our dollar cost average. Whatever we're doing, we'll double it up when it's in this zone. So we had an opportunity from June all the way until April to do that, to double up our dollar cost. But now we're back into a place where we're back above that zone. There's really nothing magical about that zone, but it just kind of sets a rule for us. It creates a rule where you got a 60 to 80% discount on a high quality asset. Well, that's a great time to maybe double up on your dollar cost if that's what you're doing, if that's your strategy. We're back out of that now, and that's a sign I think we're moving higher. There's also another key ratio for those watching, the Bitcoin and S&P index ratio. When that number goes above 7, that's a big deal historically. We've noticed just from analyzing it, and so we're
a lot
right
of
there
things
at 7.
outperforming the market. The gold Dow ratio has turned too, right? I know people watching that.
Yes,
happening.
Yes. Yeah. There's a lot happening, but again, we're not of the opinion that that the whole market now is going to go down. Let me go back up here to a S&P chart. It's a little bit higher here. Yeah, we're not of the opinion that the whole market is going to go down later this year. I have heard some different theories of, say, like a melt up theory followed by a big crash. We're of the opinion that the crash mentality is kind of tied up in the 2022 sell-off, that there is a lot of emotion and psychology that tends to surround bear markets, that tends to linger. That's what we see. But we see that many people are still married to the idea of everything is going to crash because it just did.
Well, Jerry, something I discovered, I really haven't shared it out there, but I used to Google stock market crash 2020, stock market crash 2021, and there are always multiple predictions about a stock market crash. Go and Google stock market crash 2023, and maybe you find Grantham's call. And I'm telling you, there is not a lot out there about a potential crash in 2023. And previous years, you'd have at least 10, 15 bears out there with their reasons for a crash. Google it, stock market crash 2023, and you're not going to see a lot.
Huh.
Does that mean anything to you? I mean,
I don't know.
Could it mean something?
Perhaps. I mean, for me, I try to stay off social media, but whenever I get on social media, I see a lot. I see a lot of that kind.
Yeah, this was not even, it's not social media. It's just,
Mm-hmm.
who is writing for Fortune magazine or Barron's, those articles, and talking about people need to get prepared for the flood, and build their ark. It's not out there.
Interesting.
Anyway, I thought I'd share that tidbit going into the end of it. Your work is clean, and I like your regimen about how you teach people to be disciplined when they have a buy program and levels. You're a reasonable guy in a wild industry, and reason and prudence is they're great qualities to have, Jerry, and you have them.
Thank you, Dale. That means a lot from you. That does. And I just saw a question here real quickly. It says, can I ask what vehicle you are using long term on Bitcoin? Yeah. I saw that from Rick. Just real quickly, I buy Bitcoin outright. So I just buy physical Bitcoin, even though there are a few ETFs out there. They're not great, in my opinion. I just use regular old Bitcoin. I buy it through Kraken or Coinbase or any exchange, and I hold it in a hardware wallet. So I don't keep it on the exchange. I always buy the Bitcoin and then keep it in my own possession on a hardware wallet. Great question.
And it's not that easy to, if you're a novice, to do that. Is it?
It's much easier than it used to be, but you're right. It is a little tough. And we have a whole course, and we explain to people exactly how to do that. We've got a lot of great material and courses for people who are interested in doing that. Followthemoney.com.
Well, I may have to sign up for one.
Yeah. Well, I'll give you we've been on here so many times. How about we extend you a complimentary, subscription, because I know you would definitely use it and share it with your audience. So.
Okay. I'll take you up on it, because, my team here dragged me kicking and screaming into the, 21st century. Or is this the 22nd? Anyway, I was known as not low tech, but no tech.
All right.
Now I can get
now you're low tech.
I don't have the attention span to do all those things that you need to do to buy it and transfer it to a wallet. Anyway,
well,
just a sign of my mental state.
It's if I didn't have a wife who was analytical, I would probably be in the same. But I don't even have a cell phone, Dale. They're completely distracting me. But my wife is kind of macro or micro. I'm macro, and together we make a great team. So I totally understand your complaint.
Yeah, we're macro. So Jerry, best way for people to follow you at Twitter, your handle's at FTM Daily. How about showing us your website and where they could go?
Yeah, great. Thank you for that. So you just go to followthemoney.com. You load it up here. You just go to followthemoney.com. You'll come right in, and you can enter your name and an email address right there if you want to join our free email list. But then there's a ton of materials up here in the top header where you can download reports. You can get our podcasts that we do. We do a stock trading podcast. We do an economics podcast, a precious metals podcast. And we got tons of member resources. So we put out, I'll show you one last thing if I have 30 more seconds. Our ETF leaderboard is one of our favorite services for our members only. And for the last 8 weeks, we've had sugar at the top. And I don't know if anybody's been paying attention to sugar. Sugar has just been on a tear. It's been the number one ETF, the franc, and then France. And so we rank 150 ETFs by trend. And so many traders love this. And you can see Kman, there's the chart. It's just been taken off. We put it at number one about 8 weeks ago, and it's just stayed there. But people can come in and they can, if they like to trade ETFs, boy, this is a great service. But this is one of about 50 different pages and services that we have access to for our members. So they can learn all about that by either going to our shop link or just by clicking on the plans and pricing, and they can become a member. And we'd love to have them. We'd love to coach them. We'd love to mentor them. And we'd love for them to start a 7-day free trial and kick the tires and test drive.
Cool, Jerry. Where are you geographically?
I'm in Fayetteville, Arkansas.
Okay.
Lovely little mountain town down here.
Sounds nice. So you could ride out any storm there?
Yeah, pretty much. We're about 50 miles from Walmart, or 25 miles from Walmart headquarters. So there's you wouldn't think of it, but there's really a tremendous amount of corporate environment here, a really great job market. And and then we moved out, kind of get off the grid. We're out, on 5 acres with woods, and we're kind of away from the city, but it's a lovely mountain area and good people, great place to raise a family. We homeschool our kids. It's a wonderful place to be.
Jerry Robinson, you got it all. Thank you, my trading warrior brother.
Thank you, brother. Good to be here again. Look forward to next time.
Check Jerry out, and Jerry, I'll be in touch with you, keep you in rotation. All right, bro.
Thank you, sir.
All right. So Jerry Robinson, everyone, follow him on Twitter at FTM Daily and check out his work. You saw just a glimpse of it today. And you could join the team in 10 minutes on the Morning Edge. That's a wrap for me, everyone. Hope we added value to what you're trying to accomplish. It's not easy being a trader, but just like you have to be patient with the market, be patient with yourself. And above all, don't just count your pips, count your blessings. Have a great weekend. Thanks again, Jerry.
Thank you.
See you guys. Oh, thank you, Mandy. All right, adios, everyone.